Hello and welcome to another episode of the Opportunity Podcast. I'm your host, Greg Elfrink, head of marketing over here at Empire Flippers. And today I am speaking with Mark Osborne. He is a certified exit planning expert, and we have an awesome conversation in this episode. So, Mark is one of those guys where I feel like I probably could have had like 3 episodes with him. I definitely did not get to all the questions I had for him, but he focuses on exit planning in a very unique way. So, in my experience, when most people are talking about exit planning, they're thinking just purely the financials. And while that is extremely important, Mark focuses a lot more on the sales and the marketing side of things, which is kind of like the redheaded stepchild when it comes to exit planning, despite it being like incredibly critical in terms of like actually getting a good deal done and selling a business for a life-changing amount of money. So this is a really fun conversation. Mark knows a lot of good things on what you should do, especially towards the end. We talk about like when you should be investing in marketing for growth of revenue versus growth of value, like your actual valuation, which is two pretty different activities that we get into towards the end of this podcast. So with that said, I'll get off my soapbox and we'll get right into it. I will see you on the other side. All right. I got Mark Osborne with me here today. We were just talking offline about some fun business battle stories between conferences and how to heal a sore throat before you go up on stage. Mark, it was a pleasure meeting you on here. For my audience that doesn't know who you are, though, and the cool conversation we just had, why don't you introduce yourself and where you're at in the world?
Sure, absolutely. I'm excited to be here, Greg. So, as you said, my name's Mark, and I am one of the few, if not the only, marketer that's really focused on building the marketing and sales systems that help companies prepare to exit. And so there's this really interesting dynamic that if you're going to run a company for 7 to 10 years, you make some really strategic investments that start in the red, but eventually pay off and pay off really handsomely. But it might be 7 to 10 years down the road. Versus if you're thinking about selling within the next 5 years or less, even, you make very different choices about what to do with marketing and sales. So I'm a certified exit planning advisor. I have an MBA, so a little more of a technical background. I like to joke, a lot of marketers can't spell EBITDA, and most of them are really just sort of running campaigns, trying to get some top line revenue. They're not thinking about building enterprise value and some of the intangible capital that makes a company more valuable. And so that's sort of what's unique and different about me. I've been doing marketing and sales for more than 25 years, worked with some great clients like Nike and Hulu and General Motors, and won some awards from Ad Age and other places. But it's been really interesting over the last couple of years to really be focused on companies preparing for exit and how that can really maximize that enterprise value through marketing and sales systems.
Well, Mark, you put a spear in my heart because not only am I a marketer for an M&A marketplace, but due to my dyslexia, I often misspell EBITDA. So thank you very much for poking the anxiety there. No, that's really cool, man. This is a really fascinating background. So before we get into exit planning, like we were talking offline, like I'm very keen to see like how does marketing and sales play a role in exit planning. As a marketer myself, I think it's fascinating. But before we do, like maybe we back up just a little bit. Tell me a bit about your backgrounds. You spent like what 25 years now in the
Yeah.
SaaS world, or like how did this all come about? Like what's
Yeah.
your origin story here?
So in the early days of the internet, we're going way back. So some
GeoCities.
some of your audience won't even know what this means, but some of them will. So in the early days of the internet, you didn't have the internet in your pocket all day, every day. In fact, most people didn't have access to it, all the time, but more like, once a week or so. People would go someplace to check their emails or, log in to do things like that. And so what emerged were billboards, like the billboards that are at your grocery store where someone puts up a, take one guitar lessons, first one's free, take this, call me. That's what a lot of the internet was. And I was in college playing in bands and managing some bands. And I noticed that people were going online to these billboards and they were posting, I've got the Dave Matthews Band bootleg recording from Birmingham, Alabama. Well, now I know that you like bands that sound like Dave Matthews and you live at least somewhere near Birmingham, Alabama. And there was no such thing as spam at the time because people wanted you to know how to get in touch with them. So their username was actually their email address, and they proudly put it out there wanting you to email them. So I started building email lists of fans of different genres that lived in different geographic areas. And so I started emailing all those folks when one of my bands that sounds like Dave Matthews went to Birmingham, selling out concerts for little unknown acts, which then caught the eye of a record label, which then got me a job at a radio station. And then I actually, grew up and was managing a multi, 9-figure, 10-figure budget for a radio station and a staff of 20 people. But radio was really slow to adapt to these new technologies, these things that had gotten me really excited about marketing to begin with. So I left a fairly successful career in broadcast media, went to a tiny little digital agency, figured out how all of those things work, got my MBA, focused in analytics, and then got to work for some really, large companies. I was one of the first companies that had access to the Facebook and Twitter fire hose of data, and we built machine learning and AI models to predict ad response to that. And I worked with, as I said, like Nike and Hulu, building big marketing analytics programs and big research projects with companies. But I saw that the sort of insight and structure and systems that these big companies had, a lot of smaller companies were missing, and they couldn't afford the sort of marketing and sales leadership to help them implement those. And so they really just struggled. And I'm really passionate that, there's so many people out there building great, amazing solutions to problems, but they're not sort of getting the light of day that they deserve. Unfortunately, good ideas don't sell themselves.
Yes.
And so I left that corporate world to focus on helping companies as they build and grow to have those systems for marketing and sales that can help them grow. And now increasingly focusing on, as they've grown, now that they're ready to exit, how do we do that as well?
Well, I mean that's an incredible background. So with the big systems that you're working on with, like, say, Nike and stuff, are you seeing those systems? From what I gather, you tell me if this is wrong, but it sounds like these other SaaS owners, these other founders in general that you're working with, they just don't know what they don't know about marketing and sales, because the tools, I'm assuming, are now pretty democratized, right? Like they can get access to them, but they don't even know that this thing exists. Is that kind of correct, or?
Yes and no. So the biggest problem that I see is that, people get told you need this tool, whatever it might be, CRM. And so then now they've got a hammer and they go looking for nails. But the right way to go about it is to think about, what am I trying to accomplish? What's the strategic objective that we're really trying to connect with? And then what are the sources of data or tools or automation or AI that allows us to achieve that objective faster, stronger, better, 24/7, with fewer mistakes, whatever it might be. And that's the, more appropriate approach to building in this marketing technology and ad tech and, data and RevOps, all those things, is to think through that strategic lens. And unfortunately, many, sort of founders, entrepreneurs, haven't been trained in how to think through the strategic lens of, what is the problem my customer is trying to solve? How do I speak to that instead of talking about my features of my product that I've built that I'm so proud of, and instead translating that into, well, what does the customer care about? And then through the lens of, and how is what I do or the way that I do it different than everyone else that's out there? So many times I see companies really struggle with, they kind of talk about the benefits of the category, if they even talk about benefits. Usually they're just talking about features. We got this feature,
Right.
this feature, this feature. But those are the features that everyone has. And so they don't know how to stand out. And a CRM isn't going to fix that. Or, an AI tool isn't going to fix that. Instead, you need that strategic approach to the marketplace first.
Those marketing fundamentals, I mean, to you and me, it's probably second nature, but to a lot of, like, even pretty successful entrepreneurs, it's not. I was talking to a guy, he has a pretty successful, like, AI automation agency, and he has a website that he barely uses. He has all his business referrals. It's like a lot of
Sure.
enterprise stuff, right? So he's asking me for advice because he wanted to start doing, like, some real marketing for it. Like, sure, I'll take a look at it, and like, whoa, this website, dude, like, your headline has about like 20 words in it, and about 10 of them are AI, enterprise, automation, artificial intelligence. Like, dude, you're saying like the same thing over and over again, but you're also using this like corporate speak. No one knows what you're even talking about. The signal you're giving off is like, wow, this guy sounds really competent and extremely expensive, and I have
But I
no
have
idea
no
what
idea what he
he
does.
does.
Yeah.
Right? I'm not even going to book a call because whatever he's selling, it's very expensive, right?
That's right. That's right.
So I feel you on that. What would you say is like the when you go in to do these exit plannings with these entrepreneurs, what would you say is like the common mistake? So you mentioned one that I think is a pretty fundamental mistake, not like going after the customers like actual emotions, the problems you're trying to solve, right? But is there anything else you see that's pretty common across your clients?
Yeah. So it's funny, marketing and sales is fundamentally a bet. You're making a bet on what's going to pay off. And so if you think about traditional strategy, so you start in the red because you got to, kind of get the research, however you get it, whether you do interviews with customers or just spend some time thinking or just spend some time reading what's available. Then you got to synthesize that research and then you come up with some ideas on what might work from a strategy. All of this is still in the red in terms of a return on investment. You're not getting any return on this yet. Then you start to test some ideas in the marketplace. And then you start to get some resonance with those ideas. Now you're starting to maybe break even, but then it can turn, really steeply up and you can see a very strong return on that investment and strategy to get there. For a company that's already generating 3, 5, $10 million a year, you have a strategy. Could it be better? Probably. Is it worth investing all this time in a negative, return on investment activity like research and synthesis to come up with a new strategy? If you're going to sell it in less than 7, 10 years, probably not. Instead of trying to come up with a new strategy, which is a lot sexier and a lot more fun, and it would lead to a new logo and all the things that you want to do, instead focus on the systems and processes that make the business more transferable. It's easier for you to remove yourself from the business, make it more attractive to a potential buyer. They could actually see themselves owning it because that then protects the value that you've already built versus investing in this, in a completely new strategy, which if you're starting out, you have to invest in strategy.
Yep.
And if you don't have a business that's running, you got to invest in strategy. Like if you've been falling off for the last 10 years. No one wants to buy that business either. But if you've got a business that's been running, don't invest in strategy. And it still sort of makes my fingernails curl a little bit to hear myself say, don't start with strategy. But in that exit space, it's really true. You start with the systems and processes, which day one are positive ROI because they improve your efficiency and effectiveness, which drops dollars down to your bottom line EBITDA. And then as you improve those systems and processes, you now have the flexibility to make some strategic investments, to spend some time because that return curve is actually much steeper and more shallow. It doesn't go as negative because now you've got all the systems and processes in place to take advantage of really good strategic insights. So that thing right there is such a mental shift. And it even took me quite a bit of time to get there, but I definitely see such a difference in the return. And so many, marketers are out there saying, no, we got to do all this research and come up with your new brand position. And all those things are valuable, but they're valuable to the next owner that's going to buy it and then maximize that. You're not going to see a positive return on that investment if you sell within the next 5 years.
Yeah, you'll actually take a hit when you go sell because like the buyer probably won't let you do an ad back on that, right?
That's right.
I agree with pretty much everything you just said there. Real quick, you said don't do a new strategy if your plan is to sell in 7 to 10 years from now. That seems like a long time. Like you recommend like keep everything steady for that long period of time, or
So I may have misspoke a little. If you're not planning to sell within the next 7 to 10
oh,
years,
okay,
those
I just
strategic investments
gotcha,
will pay off and they are worth doing.
gotcha.
If you are planning to sell, and oftentimes when people get ready to sell, they've had enough. Like they're ready to get out as quickly as possible. Now, the best practice in the exit planning space is give yourself at least 3 years, and it usually winds up turning into 5. And then you really get a lot more value out of the company than if you're like, put the sign in the yard, I'm ready to go. But so if you are, shooting for that 3-year time frame or less, which oftentimes people are, those strategic investments, coming up with a new logo, coming up with a new tagline, that is not the place to spend your time and money.
100% agree. I mean, we see that even, with the businesses we have, right? Like when I talk to a seller, like, oh, I'm not interested in selling for like, another 18 months. Like, good. That means we need to get on a call now. Cause like
That's right.
18 months, you don't want your dream of how valuable your business is broken. You want that broken now so we can
That's
work
right.
towards that, right? I always joke I like break an entrepreneur's dream every week so I can help them wake up actually rich, because sellers they
That's
don't
right.
overvalue themselves, right? So yeah, I agree with you. I think in marketing, there is especially a tendency to do this like massive mistake because like there's all sorts of new shiny objects all the time in marketing,
That's
right?
right.
Like in your experience working with founders, I'm curious because this is my experience. I'm curious if you share this. Like a lot of them are not like marketing focused, I would say. And so when they go into a new channel, they kind of have these silvery eyes, like this is going to be amazing. And then the reality of the conversion rate hits them. They're like, this is terrible. You're terrible at marketing. And the market's like, dude, I told you this is probably what was going to happen. Like, do you see that often too? There's like, we're going all in on this thing, then pivot and go to this next thing because like they can't wait around for that break even to iterate and grow to the next stage, right?
Absolutely. And that's why, like, I have a big pet peeve on the term growth hacks. Like, when it originally came out, it fundamentally meant test and learn and use data for a feedback loop so that you
Right.
can
Flywheel.
actually you're getting better. But it has come to be used as try this new shiny thing. And unfortunately, and I'm sure you've experienced this as well, in the marketing and sales space, there's so many sort of snake oil salesmen that most founders have been burned at least once
Oh yeah.
by someone that came in and was like, we're gonna, we're gonna launch a LinkedIn campaign with this automation tool and this customization tool, and it's gonna flood your calendar. And so they've chased that thing for maybe 90 days, and then they didn't see the payoff from it. And that person took their money and left. And then they get their head turned by something else because someone they met at the golf course is like, oh no, you got to do SEO. SEO is blowing the doors off for me. Well, what they don't tell you is they've been investing in it for 10 years and it's
Right.
now finally paying off and really blowing the doors off for them.
Yeah.
Or they're in a new category that no one else is competing with them for organic terms. So I see that these founders, they'll chase something for 90 days and then they'll chase something for 90 days. And then next thing they know, it's 6 months to a year later and they've got a pile of scratched off lottery tickets but nothing to show for it. Whereas if they had taken the time, again, this is for folks that want to run it a little longer, to build the strategy and then build the systems that bring that to market, that's where it's not sexy, but it's a lot more incremental and you can build on build on build instead of every day you're starting fresh, scratching off another lottery ticket, hoping that this bet pays off,
Yeah.
which is what happens far too often. But again, as you said, a lot of, especially technical founders, they are world leading experts in a technology that I'll never understand, but they haven't had the benefit of learning about marketing and sales. And so they don't understand that sales isn't an event, it's a process. And that's the thing that, happens all the time is they're like, oh, we need people that can pitch better. I'm like, no, you don't. You need a process that does a better job of attracting the right prospects, nurturing them till they're ready to purchase, and then guides them through the decision-making process. Not someone that can stand up and jazz hands their way and arm twist your clients into doing something that maybe they haven't fully thought through.
I 100% agree. I mean, we launched a new strategy, like a strategic channel, about a year and a half ago. And like the first 6 months was terrible. Like we were just losing money, right? And so my boss, my CEO, he's like, so is it the strategy or is it the execution? This might be like a rare thing for an employee to say to the CEO, but I told him, oh, it's definitely the execution. He's like, what? But you're the one executing. Like, right. I
Right.
still don't know what I'm doing yet. Like, I know the strategy will work though,
That's right.
but we took that time, right? And a few months later, now it's produced like I think a 15x return on ad spend in terms of like businesses we've actually got listed. Now that's a bit of the wrong term because it's not technically advertising we're doing, but
Right.
similar kind of thing.
Yeah.
But yeah, it took a long time to figure out the execution. The strategy was good, like let's spend the time to actually figure out how to execute the strategy properly, right?
That's right. That's right.
So you mentioned sales and marketing, and this kind of leads into my next question because it seems like you kind of evangelize for these revenue systems where you're combining sales, marketing, and customer success. So talk to me a little bit about that. I've always been a bit like, I don't know, I see the benefits of it on one side, and on the other side, I see some drawbacks. But I'm curious on your take of like combining these three things for a business.
So I'm absolutely 100% dyed in the wool belief that marketing, sales, and recurring expansion revenue, customer success are all part of one interconnected system. Now, that's a big burger to try to eat in one sitting. And so what we do to sort of help people, kind of prioritize is first recognize that they all work together. Then let's benchmark where you are against other companies of a similar size in a similar industry against KPIs related to, and I call them attraction systems, attracting more of the right prospects. So not just quantity, but quality. And then acceleration systems, accelerating your best opportunities through the sales pipeline so that you are focusing your resources on those prospects that have the potential to be your best customers. And then activation systems where you activate clients for faster renewals, larger upsells, but also more referrals and testimonials, that advocacy in the marketplace. So benchmarks across all of those allow us to recognize, well, where are we behind where we should be? Now let's focus in there, because again, you can't do it all at once. And I always, tell CEOs, there's 10 smart things you could do in the next 12 months. You probably have the bandwidth to do 3. So which 3 are you going to tackle? And I'm a big believer that if you work with someone that only does marketing, it'll never be as good as someone that has that full picture, but it can be good. It just won't be as good. And the way that we attack it is we do these benchmarks, prioritize where's your biggest, sort of sucking chest wound. Let's fix that. And then let's move to the next one, and then to the next one. And then let's work on bringing them all together to where you have that really sort of, humming system, partly because, companies want this kind of hockey stick for, growth curves. You cannot get that by only focusing on acquisition.
Yeah.
Because you will run out of marketplace. Getting another volume of leads to, break in is just way too expensive once you get to the top of that S curve. And so by figuring out how to make more money with each customer, have that money be more recurring, have those customers bring you new customers, those activation systems, that is oftentimes one of the least underutilized and most valuable resources that businesses are sitting on that they don't think about. And partly the reason they're not thinking about it is because they're not taking a marketing and sales mindset to that asset. And that's why when we bring them all together, that some of the mechanisms that work really well for marketing work really well in activating those existing clients. Some of the mechanisms that work really well for closing deals and sales work really well for making renewals happen faster and at a larger price point. But when you essentially don't give that attention to that asset, you're sitting on wasted dollars.
Okay, I agree with everything you said there, actually. In fact, I've incorporated some of that stuff in our own things. Where I thought you were going to go with is every now and then I see these SaaS leaders on LinkedIn. They talk about combining marketing and the sales department together. And I'll see usually it's the sales guy, that the head of sales guy becomes the head of the whole thing, which isn't inherently a bad thing. But what I've seen play out is like sales tends to be more short term, like transactional,
Yeah,
right? And marketing, while there is an aspect of that in marketing, they also have to think about the long term of the brand. They're thinking like
absolutely.
3 quarters from now, like at Empire Flippers, once we get midway through the quarter, there's actually very little I can do to sell another 7-figure business because that happened 9 months ago, like when
That's
we
right.
first talked to that person, right? So, I'm curious on your take on this because I sometimes do think that's the wrong move to put like the sales guy like up top. So, are you recommending to combine this into like one org, or are you talking more about like just the process as is like the leads doing the hot potato across these 3 departments?
So it's different for every company. So the answer is it depends. But one thing that I always advocate for is a shared scorecard that everyone in all 3 of those, revenue generating
Mhm.
parts of the business sees KPIs from every part of those areas and collaborates on how to improve them. But what I oftentimes will see is, so A KPI might be, the volume of marketing qualified leads getting produced. Another KPI might be the size of deals and the number of revenues getting signed as contracts. And another might be, sort of the recurring rate or churn. So those are across three very different areas. If marketing is operating over here and they're bringing in a bunch of dead wood that never has a chance to convert
As we
because
do.
they're making promises that aren't authentic, then that's bad for everybody
Yeah.
downstream. If sales is selling deals that can never renew and setting up customer success to always be losing, well, that's bad too. And customer success is sitting on all this insight about what people really love about the product. And so if you bring them together on a shared scorecard, then they impact them together. Now, we weight them differently. So the marketing folks, they get more weight on, are you really bringing in, qualified leads? But it's a lot harder for them to throw a lead over the wall and, not look at the sales team if they're meeting regularly to talk about
Yeah.
what's the quality of these leads that are coming in and why are they, qualified or not. And the same with, when customer success and sales has to sit with each other on a regular basis and they're both incentivized against shared KPIs, even if they're weighted differently, then it builds a lot more collaboration, and that's where you really get high performing teams.
Oh, I agree with that. So we do, the HubSpot Classic, the marketing meetings. We haven't done the one in a while, but we talk like multiple times a week. So we don't have like the
Mm-hmm.
formal meeting anymore. But yeah, we had a funny one where one of the sales guys was telling me like, there's not that many like good SQLs coming in, right? I was like, but wait a second. But your entire team is like manually said that these SQLs are good. Like over 50% of them you guys marked as qualified. Like, oh yeah, I guess it is good. So they just had like a bad day on the phone, basically,
That's
right?
right. Yeah,
Like they had a rash of like 5 bad leads. They're like, oh
that's
no,
right.
actually it is pretty good based on this. So I think it's so important to have those departments talking because sometimes there could be that friction, which isn't necessarily a bad thing either, but like just like okay, well if something's bad, let's figure it out, right? Like how do we fix this, right?
That's right.
So I agree with you on pretty much all of that. Skirting back up to the entrepreneurial level here, you mentioned
Yeah.
like you have only this much time. You probably have time to do three if you're lucky. So in your experience, what is the big way that entrepreneurs who are short on time or resources can something they can stop doing immediately or something maybe they should start doing to free up some of their own resources and growth to focus on this?
Number one thing, without a doubt, is building systems. Because once you build a system, then you can delegate and elevate. Because if it all lives between your ears and you're the only one that can do it, then you will always be, trying to catch up. But if you take the time to document, all right, what do we actually do here? And then to, put some processes in place, how do we actually do it? And then put some metrics in place on, well, what does good look like? Then you can actually hire somebody that might be better at it than you are. And you can say, all right, so this is what baseline good looks like. You have the freedom to get creative if you can improve that baseline good. But, learn the rules before you break them. Here's the process that exists today, and it's getting us these results. You can make incremental improvements on that process to get incremental improvements on the results. You can make transformational improvements on that process to get transformational results. You own it. But that can never exist until there's that process and that system. I heard someone say the other day, save yourself time, energy, and money system.
I
And
like
like,
it.
it's
Yeah.
so true. And it definitely raises the baseline of delivery because now you've documented what good looks like. Whereas when folks are just kind of catch as catch can, going through it and, well, here's what I've been doing. That's a very different outcome than if you've really got some systems and processes in place. And until you have those, you can't delegate. And then once you delegate, you can even elevate. And that's where, other people can bring in ideas you would never have.
Yeah.
So that's the number one thing that I see entrepreneurs struggling with is not really having those SOPs, like documented standard operating procedures that 90% of their revenue flow from marketing to sales to customer success, all three of those systems. If 90% of that's documented, now you've got an engine that runs. But until you get there, it'll always be relying on you coming back in to fix it.
Yeah, even companies that have been around for a while, like we just redid our MQL SQL stuff a bit ago, and like that was not a short exercise, nor was it
That's
easy.
right.
Like like had all of us on the call, like trying to figure out what is an A1, like what really is an A1, like
Right.
in terms of the tiers. So moving into some of the exit planning stuff, since we're on the discussion of systems, what are some of the systems these founders should be focusing on if the goal is to exit, like maybe in the near future? Like, what are the primary systems they should be working on?
So interestingly, it's a lot of those same benchmarks and KPIs.
Mhm.
Very often, the thing that I see them sort of fail to do is to focus on those activation systems. So activating existing clients for faster renewals, larger upsells, more referrals, testimonials, and that advocacy in the marketplace, because that is the lowest customer acquisition cost you can possibly get. And so not only that, but one of the biggest risks factors for a business to sell is customer concentration. So
Yep.
if more than 80% of my revenue comes from smaller than 20% of my customers, that's a risk. And as that ratio changes, it gets even more risky, which fundamentally just makes it unsellable to someone else, because they're not like, all your business is dependent on one person. If they get hit by a bus or fall out of love with you, then you don't have a business anymore. I'm not buying that. And so by focusing on your existing clients, how do we up level your mid-tier clients to make them look more like your best clients? How do we create recurring revenue streams within your client base? Now, I'll tell you a great story of this. A company that did roofing was like, we do a roof and then they got it for 10 years. We can't have recurring revenue. So they had a really smart idea. And what they said is, you know what? Let's create a subscription for we'll clean your windows and gutters and we'll come back 4 times a year. And we won't even charge you as much for the roof if you sign up for the windows and gutters. Their valuation went up 20% by just shifting their dollars from, well, we do a roof and then 10 years later, we hope they call us back, to we do a roof and then we turn them into not that big a chunk of revenue, but it's continuous and steady and we can bank on it, and they stay with us for 5 years of doing those windows and gutters. Like, their actual top line revenue number didn't change at all, but their valuation went up by 20%.
Oh yeah, not to mention like down the road, like you've been paying for a long time to basically remain in your marketing funnel for when they do
That's
need a
right.
new roof or get a new place or whatever.
And if you're doing it right, they're making referrals to other people who need roofs, because you have an excuse to be there, once a quarter or twice a quarter, wants to do the gutters, wants to do and ask them, hey, so your neighbor over there with the sagging roof line, how well do you know him? Would you be willing to make that introduction, since
Yeah,
we did
yeah.
such a good job on your roof? It's been 3 years now and you have no issues with it, right? Like, that's a much better way to dominate your marketplace. So those systems around those activating existing clients are oftentimes the thing that's most overlooked. The other thing that's most commonly overlooked is like a real sales process that defines, how do we attract the leads? So kind of marketing stuff, but it's really part of sales. How do we nurture them till they're ready to buy?
Mm.
Because so often, are you ready to buy? Nope. All right, buy. See you never. And
Yeah.
then how do we guide them through the decision making and process and the change management that a lot of these sort of larger contracts or longer term contracts require? And then how do we move them into this nurturing cycle so that we are asking for renewals at the right time, like when they're happiest? We are asking for upsells at the right time when they're experiencing the need, like, instead of just, well, on their annual anniversary, we're going to ask them if they want to renew. Don't do that. Like, so just like in documenting some of those processes, like, rather than waiting till the month that the contract expires, 3 months in advance, say, we'll give you a 10% discount if you go ahead and sign up for another year now. Boom. Not only does that, remove a lot of that ambiguity and cash flow when you get blindsided with, oh no, our base client didn't renew, but also it gives you the sort of enough warning that they're not going to renew, because they're like, I'm not sure if it's worth a 10% discount to sign now. Oh, really? So what's wrong? Like, now you've got 3 months to unpack that and solve it before they're out in the marketplace looking for your replacement. And just a lot of simple things. And if you document that, then your CRM will alert you when
Right.
it's, on the 9th month of a 12-month contract to start that system of the renewal, versus if you don't have it documented, you're going to look up and be like, oh, wow, their contract expires next month. We should probably start talking to them about that renewal, which is what most people do.
This is eerily similar to what I've been talking to a buddy of mine. He has an SEO agency where people get on like a 3 month recurring contract, which is
Yeah,
like short enough that it's not too big of a fear commitment, right? But people will auto renew for the next 3 months, and they will start like, wow, maybe I don't want this, like wanting a refund afterwards. Like, well, what are you doing like before that happens? Are we
that's right.
looking at, are they doing good? Are they not doing good? Like, SEO is a slow game, so I'm assuming most
That's
of them
right.
aren't doing good yet. So yeah, I agree with all that stuff. I think that's really fascinating. We were talking a little bit before we started recording, and I think this would be valuable for our audience, about the difference between like the marketing and sales activities you're doing when you're like growing to scale revenue
Yeah.
versus the type of stuff you should be focusing on when you're trying to grow the value of the
Mm-hmm.
business and when you go to sell. So talk to me a bit about this, because we've ran into this issue where people create like a whole new marketing campaign, like, well, come back to us in 8 months, I guess. So talk to me a bit about your perspective on this, of the difference between growing the revenue versus growing the value.
Yeah. So, interesting statistic. If you look at the S&P 500, 80% of the value, the market capitalization of those companies, is not tied to tangible assets or actual cash flow. So
Mhm.
that means that 80% of the value of a company is in intangible things. So, like their customer capital, what's their customer base look like, and how strongly is it committed to them? Their cultural capital, how strong is their leadership team and the folks that work there, and how committed are they to the company? Their social capital, what's their reputation in the marketplace? Their structural capital, how good are their systems and processes? So if 80% of the value of S&P 500 is connected there, it's not quite the same for a Main Street business or a mid-market company in the sort of $10 million a year range, or a small business like that. But it is a lot. And when someone comes to look at a company and look at buying it, they're going to look at that intangible capital as a way of valuing. So there's a range of multiples that I'm willing to pay, somewhere between 3 and 6. Well, on $1 million a year business, that's a $3 million difference in your sale price if you're at 3 versus if you're at 6 on that multiple. And so by building those intangible capital, you will actually drop more dollars to your bottom line because it improves your efficiency and effectiveness. So the EBITDA number will go up as a function of that. And the business is more transferable, meaning that you'll get more bids from more potential buyers, which then drives up the
Drives the price.
power of
Yeah.
multiple offers.
Brokers love that.
That's
Yeah.
right. And it makes it sort of easier for you to kind of earn out or get out whatever you're trying to do at the end, because you've got this sort of process in place. So when you're trying to sell a business, protecting the value you've already created by documenting your processes and systems and making the business more transferable is tends to be those things that are super important for making a business sellable. If it's a business that's trying to grow, if you don't have a strategy that's really working and differentiating you in the marketplace, it is worth the investments in understanding your customer base better, in understanding your competitive landscape better, and really digging deep into what makes you unique and differentiated in the marketplace, so that you can do a better job of telling that story. All of those investments pay off handsomely, very steep curve down the road, 7 to 10 years, and maybe faster. You know what I mean? If you are able to get at that strategy faster, but it's more of a bet. Whereas the systems and processes that fund that intangible capital, that create the multiple that drives your valuation, those are ROI positive on day one, especially if you're looking at selling the business sometime soon. So focusing there first, and then coming back to some strategic things like category domination and shaping and some of that other stuff, versus if you're starting out, starting with the strategy. And then once you've got the strategy dialed in, building the processes that ensure that that strategy is being executed with efficiency and effectiveness.
Yeah, that all makes sense to me. I know we're coming up on time, but I did want to bring up your book before we get out
Yeah.
of here. And maybe one rapid fire question. We'll see. We'll have time. But your book, Are Your Leads Killing Your Business? Talk to me about it. I love the name. So
Yeah.
the
So,
marketer in me is thrilled.
so free copy for anyone listening that's interested. If they just go to modernrevenuestrategies.com/free download, free copy of the book. And it's really all about, what you, I'm sure, have seen. Many entrepreneurs are like, I just need more leads. I just need more leads, more leads, more leads. But what they don't realize is that if you're chasing volume or quantity instead of quality, you wind up spreading your resources really thin across all of them. And so then you're kind of equalizing your chances of winning good opportunities versus bad opportunities. But actually, you're not equalizing your chances because your competitors have built the systems and processes that allow them to identify those tier one opportunities that actually have the chance to be, one of their best customers. And they're putting 80% of their resources on those 20% of leads that have the potential to be their best customers. Where if you are not only are you distracted, but then you're losing all the good deals. Now you're left with the scraps, and the scraps will actually kill your business because they don't, really believe in your long-term product vision. And so they require you to customize your solution for them, whether it's, technology or services. They don't believe in your way of doing it. They want you to do it custom to them. So that pulls you further behind what the marketplace wants.
Yeah.
Because you're not building for the market anymore. You're building for this one customer. Also, because they don't believe in your solution, they grind you down on margin so much that you can't reinvest in making the product better. So that pulls you further behind your competitors. And finally, they usually will churn before, ever providing any advocacy in the marketplace and, really sort of being an evangelist for you, versus a customer that is out there telling everybody that'll listen, man, I love these guys and you should work with them too. Think about the difference. If your, client base is made up of people who don't believe in what you want to do, so you got to customize it for them. They won't pay you what it's worth, and then they leave before they ever advocate, versus those that are bought in on your long-term vision, that are partnering with you in your innovations that you want to make for the product and solution, and they're out there advocating for you in the marketplace. That difference is really striking.
Yeah.
And I've seen companies, when they get obsessed with this quantity, they spread themselves too thin. They don't find the quality, and then they're stuck servicing these really bad clients that just creates this death spiral. They can never get out because they can never reinvest in the product. They can never, really shape their position. And so it's a long, slow death when you do that, rather than, really sort of focusing in on who are our best potential customers. How do we really just focus on attacking them in the sales process rather than spreading ourselves too thin, trying to service everyone?
Yeah, I feel you on this a lot. Like people wanting more. I think that it's almost like a vanity metric. Like, oh, we got like all these crazy opportunities coming in. Like, how many of them actually convert to revenue, right? Versus like, this one opportunity might have took you 9 months before they decided to refund. Like couldn't have been
That's
better
right.
spent going after something else with a short timeline. Well, we're up on time. I was going to ask you my favorite rapid fire question. You let me know if you have time to answer it. But
Go for it. Yeah.
my
It's
favorite
rapid
rapid fire
fire. Let's be
question.
fast.
Yeah. Well, we'll see. So, my question for you, my friend, after all your years of experience doing what you do, what has been your funniest moment doing it?
Probably the time I burned down my client's building.
Right
So,
on. Great exit planning, helping with the real estate value. Good,
so
good,
when
good
I
on.
was when I was leading sales teams distributed all around the country, we had big clients here in LA, and the sales rep would come in to sort of meet with this client and wanted to make a big impression. And this was back when Survivor was just, new on the scene. And it was like, the water table conversation, every Monday morning or whenever it came on. And so to like make a splash, we dressed up like Jeff Probst with the pith helmets and khaki shorts, and we had tiki torches. And in the lobby of the building, this is, a long time ago when everyone used to go into offices, We told the receptionist who we're here to see. All right, well, she'll be right up to grab you. So we lit these tiki torches, and it immediately triggered the sprinklers, and the entire 13-story building had to get evacuated. And so we're standing there in the parking lot, drenched, and the buyer that we were working with finds us. She's like, "I'm so sorry we had this fire," and she's starting to put it together in her eyes that we were the ones that triggered the fire alarm. But fortunately, she appreciated the effort that we were putting into making a good presentation. We did actually post some business out of it, and so it didn't ruin everything, but it's definitely one of the craziest stories.
I love that. That's a hell of an attraction marketing system you got going.
That's right.
Client down. I like it. Well, cool, man. Well, if someone wanted, I feel like we could probably have another part 2 down the road to this. I really enjoyed this chat. But for someone that wants to pick your brain, learn more about what you do, or just get a hold of you, where's the best place for us to send them to?
Yeah. So anyone that downloads the book, modernrevenuestrategies.com/free download, you'll get an email from me asking you how you liked it. The book has all of the templates and calculators and everything you need to start putting some of these systems in place. I, post a lot on LinkedIn. You can find me at LinkedIn, /remarkablemark, which is me, or Mark with a K at modernrevenuestrategies.com. I'd be happy to connect with anybody.
Awesome. Well, we'll put all those links in the show notes for anyone that wants to, explore further with Mark. And Mark, thanks for coming on, man. It was a pleasure chatting with you.
Thank you, Greg. I had a blast.
There you have it. I hope you enjoyed it. I hope it got you inspired at all the different things that are happening in this industry. And of course, if you just want to buy a highly profitable business, you can always go to empireflippers.com/marketplace. Or maybe you want to make an exit of your highly profitable business, and you could go to empireflippers.com/sell your site. I've been your host, Greg. If you enjoyed this episode, make sure you leave a review, give us a like, a follow, share it across social media. Talk to you all soon. See you on the next episode.